Hi, Jarrett Clay here. Just a little bit today on what happens to bonds when interest rates are actually declining. So at the moment, that may not be something that we're thinking about too much, maybe the opposite of what we're thinking, but we want to make sure we're clear on what will happen if those interest rates start coming back down. All right, so duration is something that we hear when we're talking about bonds, and it's a measure used to assess the impact that a change in interest rates will have on a bond. Okay, so shorter term bonds are generally less price sensitive than longer term bonds. So if a bond fund has a duration of 5 years and interest rates decline by 1%, the bond fund unit price may increase by approximately 5%. All right, so basically, if those bonds are affected by other factors, there is inflation that can affect them, supply and demand. So they're not the only thing that we have affected by the price. The, it's the value of those bonds can be a supply and demand issue, right? But the interest rate is going to be your number one factor that we're looking at. All right. So what we want to know is that keeping it simple for you is that shorter duration bonds, all right, are basically going to go up in price less than a longer duration bond's going to go up in price if the interest rates go down. All right, so we can see in our little graphs that we have here the difference of a 0.5% decrease over the different types of bonds. It can affect price, from going up from 0.5% for the shorter term bonds, which is a 1 year duration, versus say 2.5% for a 5 year duration. All right. But if you have, so you multiply that out, if you have a 3% rate decrease, you would have a 3% potential drop in the, gain in the price of your 1 year duration bonds, but a 15% increase in your 5 year duration bonds. So, what do we really want to take away from this is that because you already pre own those bonds, and whatnot. If the interest rate goes down, the rate of return on future bonds is not going to be as good. So people are going to want your bonds that are paying more. That's going to make them worth more. So it is just something to think about when we're thinking about interest rate and bonds as to what is happening in your overall portfolio. Just remember that simplicity, declining rates going to lead to higher prices on the bonds you already own. All right, you take care. Bye now.